Hi and welcome back to my final daily report market video with me, Richard Perry, market analyst at Hantec on Wednesday, 19th of June. Looking at gold, which has been a bit up and down actually in the last few days. It's had a couple of attempted breakouts above 1348, this old February high and then the subsequent early June high. Hasn't yet closed above that resistance, despite a couple of intraday attempts. And again, yesterday's move higher through that 1348 mark on the back of the dovish comments from Mario Draghi was tempered into the afternoon from the comments by Donald Trump, who talked about this meeting that he's going to be having with President Xi of China. Now, moving into today, we've got this Fed meeting, and this Fed meeting is interesting because it could be a meeting where the Federal Reserve lays out plans to turn into a more of a rate cutting cycle. But how do they do that, and is it going to be able to meet expectations of the market is the question. I'm not entirely convinced it can, and subsequently it's interesting that we're starting to see gold slipping back a little bit more. Now, this comes with these momentum indicators, which are sort of hovering now. They were holding up in strong configuration on the move, and yesterday's move above, initially move above 1350 area seemed to be looking strong again, but then pulled back into the close, and you're now starting to see the stochastic possibly rolling over again. I've been talking about negative divergences. Below 65 on the RSI would be a confirmed negative divergence. Also below, I mean, you'd say below 80 really, but I suppose below 75, really with the stochastics would again suggest a bit of a negative divergence there. And if you do get a hawkish surprise or not really meeting dovish expectations of the market tonight from the Fed, you could easily see the gold price starting to correct back as the dollar strengthens. And initially the support is 1339 today, but again in front of that FOMC decision, you could see that perhaps even coming under a little bit of pressure. Below 1330 and 1332, that reopens 1324, this old breakout high, and the 1319 reaction low from early June. So this could be a really important moment for gold. Certainly if the market starts to turn corrective, likely to see it reflected through those momentum indicators and starting to pull a bit of a correction. But I'm still ultimately on a medium to longer term basis, I still think that gold is going to be moving higher. But 1310 to 1324, nice band of support. 1300 ultimately is the support, I think. But I wish you good luck in your trading today, and I will speak to you next time.